week where we had a bullish narrative.
Yeah, we did. And everything sort of collapsed over the last couple of days, including stocks, not just crypto, but stocks and a couple of other things. But it's not all doom and gloom. There are a few bright spots along the way, which we'll have a look at. But I think what we'll do today, just for the viewers, and welcome to everyone, we can't see who's in the chat on this setup. So I'm hoping that everyone's found their way in. So if you have, welcome to all of you. And today I'm going to be talking about energies, metals, and stocks, the three things that are kind of moving at the moment. And then Paul will follow on with crypto thereafter. I'll make a couple of comments on that too. But it's going to be just focused on those things. Hi there, Pede, Vanu. Nice to see you. So welcome, everyone. Make yourself at home. Enjoy the stream. Put up any questions if you have any. Ask your questions. Post them up in the chat early so that we can get to them before the stream finishes. Yeah. And yeah, anything else you want to say, Paul, before I launch into energies and metals?
No, I'm sure people are keen just for some kind of sense of where we're going, what's happening, can we rebuild, something like that. So give us some hope, James.
All right. Let's get straight into it. We're actually about 1 minute early, so let me get my charts set up and have a look around. I think what I'll do today is start with natural gas rather than leaving it to the end. It's always tempting to leave it to the end so that people don't leave the stream early. But today we'll give you a treat and we'll start with natural gas. So we'll wait for 1 minute until the clock ticks over before we begin. Natural gas had an incredible move, by the way, one of the best moves of the year. And we were on it. So we've been fortunate with these big moves. We've got all of them so far over the last sort of 6 months. There've been a couple. We've made over $1.20 on this move. Actually $1.30, including the last profit we've just taken. All right, so the market's just rolled over, or the clock's just rolled over. The market's just open, actually. So quickly, let's go across and have a look at stock markets as we open this trading day in New York. And you can see the NASDAQ's barely moving. We've just reclaimed the 100-period moving average and the $25,000 level, which is something. Although we did fall down below the 50% retracement level, only fractionally, we did close below it and close below the 100-period here on the NASDAQ. However, the 100-period is still holding us up. We have fallen out of what was potentially a rising trend line and the angled part of a rising triangle. So that line is now invalidated. In fact, it was taken out with a gap. We've talked about these gaps all the time, Paul. We saw it on natural gas. We saw it on Bitcoin. And I think we saw it on oil and gold as well. Gapping over these key levels. When you can't get through a level, the market, this is what it's thinking. If I can't get through there, there's only one way to do it, and that's to gap right over the 20, the trend line, and the 50, all in one go. And we did actually see the same thing on natural gas and on gold and on Bitcoin quite recently. So that's the way the market deals with problematic areas. And so we're now below all of that stuff. I'm not going to redraw these lines at the moment. I'm just going to see what happens if we can reclaim this level, hold the 100 here, reclaim the 50, and get back up towards the 20, the short-term important moving average here on the day chart. And if we get back up there again to the underside of the trend line and the 20 period, that will be, as Paul likes to put it, a bearish retest. So we're now looking bearish, having broken down through some of those key support zones. But I'm not going to go totally bearish on the NASDAQ until we've broken down through this red line at the bottom here. It's almost a double bottom. It's the bounce out of one of those perilous tariff setups, the Taco Trump trade, if you will. And we saw the same thing on the S&P. This is all I'm going to say on stocks for the moment. We'll cycle back to it in a minute once I've dealt with natural gas. But the S&P, same thing, gapping down through the two trend lines, actually, and one simple moving average, the 20, right down below it, down through the 50 on the next day. That was yesterday. So we got long again yesterday, below the 50, but above the 100 in no man's land. A lot of people will say, well, why on earth would you buy here? Well, there's a couple of reasons for it. I think overall, my picture viewpoint on stocks remains bullish, and therefore I'm looking to buy dips. This is a 38% retracement too. I don't have it drawn on. Let's just put it up there. 38% retracement, decent zone to buy. Yes, it's a bit weak because we've broken down through the 50, but it's okay. Like the NASDAQ, I'll only consider this market to have turned around and not be bullish anymore once we break down through the red line. And I've labeled that actually as the invalidation level. That's actually a double bottom. on the S&P. On the NASDAQ, it's not quite a double bottom, but it's close. So if we break and close below that red line on the S&P, the NASDAQ and all the others will have done similar, I suppose, at that point, and we'll then be looking at a short market and looking to sell rallies rather than buying dips, as long as this market begins to correct. I don't think it's going to happen though, and I think we'll probably try and hold here, or at least the 50 period, 618 fib down here, and this last swing low at about 6,700 or so. I've got an itchy nose. Sorry about it. I've got a. I try to know why. We have some fruit flies. It's the middle of summer right now, and these fruit flies are minuscule, and they fly around the whole house.
What does an itchy nose mean? Itchy ear is someone's talking about you? I don't know. What is it? What does it mean? Someone's making sausages? I don't know.
For those in the know, that's what it means. All right, so I'm still bullish. We've just bought some more S&P, so yeah, I put my money where my mouth is on this one. Also below the 50 period here, but I want to come back to stocks shortly, and we'll let's carry on with natural gas. Now, this is a really interesting chart, and I'm going to talk about this chart here at Pepperstone because it's the continuous ETF chart, and I abandoned the futures this week because we got the rollover at Black Bull, and then next week the Henry Hub rolls over. So a couple of days, in fact, it's tomorrow that Black Bull rolls over. So I've moved into the continuous contract just to avoid the messy part of the rollover. Now, we started buying variously on the way down. I don't have all the trades on here because we were trading the futures, and we managed to get short and long hedging when the markets broke down through key supports. And then we took profits on the short side of those hedges and added longs where possible. And on the last occasion we did that was down here at the bottom at just around $3 on the futures, 320 here on the continuous, and we've been long ever since. And I've hedged occasionally, unhedged, and taken profit on the short side of that hedge, and resumed the long side on the dips. And so we've managed to get a lot more out of this contract than it's actually given us if you take this as a one-directional move. But because we've been hedging and unhedging, we've managed to actually get about $1.30 out of this move up. It's only moved up about $1.10, I think. Actually, it's actually moved up $1.80. So we didn't do quite as well as we could have done. It's moved up from $3.20 up to $5. Yeah, so it's moved up $1.80, but we got $1.30 out of it, which is fantastic. Notice as well that there are a couple of things we now got to watch out for. It's very overextended. Natural gas is trading in a range now, which I believe to be between somewhere, not precisely, but roughly around $3 to $5, perhaps $5.50. We got up to $5.36 a couple of months ago. We haven't got back that far just yet, but we're heading up towards that purple arrow, and that is a weekend gap, which is now still unfilled, unresolved. We've already resolved that one in the middle, which was a rollover gap that was resolved by that bounce up into the zone. And we have got a gap now below us too, which is kind of tricky. Most of the time, these natural gas gaps do get filled over in time. And because this is a range market, we trade from the top down to the bottom and back up again, back down to the bottom. These gaps will eventually get filled because of the range nature of the market. Just how quickly, we don't know. It's always tempting to think they've got to be filled immediately. However, this gap on the left-hand side here took place on the 8th of December, and it still has not been filled. This one down below at the bottom we've just left behind was on the 19th of January, and so that one will have to be filled at some point too. So, we're at the top of the range, more or less, close to $5, very expensive. We've got a rollover gap down, a weekend gap below us right at the bottom near $3, and we got one near $5, and we're trading up near that top gap. I suspect what we'll try and do, and considering now that we've got the weekend coming up, we've got the gas storage report coming out tomorrow, which will indicate how much drawdown there's been on storage given the cold weather. Not much really, but the anticipated cold weather and the beginning of it starting now means that storage may not have been affected just yet. And that could put a bullish slant on the market until the numbers, these drawdowns, start to eat into stocks. That doesn't happen immediately. So we may, that's tomorrow, right? The storage report could be bearish for this price, and we might have to move back down to somewhere into this breakout zone. We've got no volume supporting this move up either. It's a very dramatic move. So we're going to probably wiggle back down. The only question is, excuse me, are we going to test the top gap first, or are we going to test the bottom gap first? And the point is, we're going to probably test both of them at some stage in the next number of weeks. I don't know which one's going to go first, though. I suspect we may have to get that back down to $3 first, but I don't know. It's just a wild guess. So I'm now fully hedged. I've locked in about $1.30 of profit on this entire move. It's our second best natural gas trade, I think, in the last 4 years. We had one move of about $1.20 about a year ago, and I think that was our. I think this is actually could be our best move. I think that was our second best. So fantastic move up. There's no point in throwing this profit away now by trying to get long or get short in an incredibly overbought market. If I put the RSI on here or the stochastic, let's do it. I don't need to, but you'll be able to see that it's incredibly overbought on the RSI. Same thing on the stochastic. In fact, the RSI has gone so high that it's gone green. It did over there as well in October. So we're as overbought as we were in October last year. And in October last year, we dropped from the high of $3.50 down to $3 on the pullback after the overbought RSI. So we're right in that situation right now. So a 50-cent pullback at least, but that move wasn't nearly as big. So percentage-wise, it's probably more like $1, and that could take us back down to $3. So I think probably I'll be looking to buy it at $3 again or sell at the top of this gap, and that's at about $5.20. So that's my strategy. Sell $5.20 or buy $3. At the moment, I'm fully hedged. All that profit's locked in, and it doesn't matter which way this market moves now. At some point, I'll take the hedge off because this is the continuous contract, and because we're in, because the futures will roll over next week, and we'll have an adjustment. And because of that adjustment, the futures adjustment, we get charged overnight rollover fees on the continuous contracts, but not on the futures. So if you're trading the continuous contract because it's easier, good on you, but it's going to cost you. If you're trading the futures because it's more difficult and you're good at it, good on you too, and it's free. So that's your choice, really. A lot of people go for the continuous ETF because it is a lot easier, avoiding the rollover mix-ups. So that's the strategy. Sell $5.20 or buy $3. And if I do nothing until then, I've still got $1.30-ish locked in profit no matter what happens next. And look at the RSI, it's just right through the roof.
Yeah.
So I'm certainly not buying here. We did buy, actually, saying we're not buying here, I did actually buy at the bottom of this last 4-hour candle and got out at the top. So yeah, I was tempting fate a little bit, buying, scalping, day trading, if you will, at these very high levels. That gave us another 10 or 12 cents.
The thing about the RSI as well, it's like, I remember when I first started trading, and I was like, oh yeah, if I just follow the RSI, looking at it, doing some back testing. But then the reality of trading the RSI in real time is a little bit more challenging because, of course, we could have a double top, right? We could have another leg up and it could form a double top. So it's always, again, this is why we use confluence as traders. So obviously we're cooking on the RSI, which suggests we're oversold, but we need additional signals as well before we do anything else with it. So it's always very challenging for sure. But
absolutely. That's a very good point.
Yeah.
I mean, this RSI could, if this price moves up to $5.20, the top of that gap there with the purple arrows, the RSI can't move up higher. It's at the top. So it's just going to stay there. It's almost at the top. It's just going to stay there. So it could do that. But look what happens every time on natural gas. The RSI gets into that sort of green, weird fungal looking zone every single time without fail. Over there in last year, May 2025, we dropped, I'd say 50%. The next time it happened, we dropped 50% for sure. From that bottom up to the top, we dropped 50%. Next time it happened, we dropped 50%. That time we dropped 50% to start with, and then we dropped the whole way. So this time, I think we'll drop 50%, and that would be normal, and that would take us back into a more attractive zone for buyers because it's too expensive right now. So 50% of the move up from $3 to $5 is $1. And as I said, that will take us back down to $3, $4. Is that $4? Yes, we're not quite at $5, $4.87. That would take us back down to $3.87, somewhere down here. And I'd go for sort of the $3.75 level being one of the key levels on the natural gas charts, just over a long period of time. So yeah, big pullback down to $3, maybe $3.75. Probably have a go there too, as I said. or if we manage to reach up to 520, close that gap, I won't be selling the bottom of the gap because the top's going to be too tempting. If we've got that far, we're going to go to the top. We will get to the top of the gap and probably higher, possibly. And so I won't be selling the bottom of the gap. I'll be selling the top at 520 if we get there shortly. If we don't get there anytime soon, we're going to dribble down, and we may even get a chance to get short. And we'll look at these reversal candles if they start forming up at the top here. And if we aren't going to go higher, I think it's going to be difficult to get higher this week, especially with a storage report coming in, and we don't know what that's going to be like. And so we could be looking for reversal candles here to sell this back down to 375, potentially $3. All right, so that's natural gas, folks. Are there any questions in the chat?
As I mentioned about crude oil while you're on the subject.
Yeah, all right, let's look at crude.
Yeah.
Anything else on natural gas that anyone would like to ask that I've not covered? Don't think so. All right, let's look at crude oil. So I've got two crude oil charts on here. First of all, you might ask why. I've got Brent crude, which is this one, which the pommies like to trade a lot more, as they would. And it trades slightly differently, slightly different pricing to Brent crude, to WTI, which is the American alternative, I suppose, in its sort of a way. And you can see the charts are a similar shape, but they do move slightly differently. And I've got them both on because I like to look at confluence between these two charts. When one forms a reversal pattern at a key level and the other one has not, I get a bit more skeptical about it. But when Brent crude and WTI both do the same thing at a similar time, that gives me a lot more confidence in the trade. That's just a side point. You can see, for example, when we got to the 200 period moving average here on Brent crude, we did the same thing on WTI and rejected from there. And that's where we sold on our last occasion, at that 200 period moving average. Right. So my theory is that oil is going to try to get down to $50 and down to 48, maybe even below the 40s, with a bit of luck, a lot of luck, into the 30s. I think that's more of a, I don't know. I don't think it's impossible, actually, far from it, but I think that's probably a bit of a stretch. But I do think we can get to 50 and down to 48. And then I think we, at some stage, going to bounce back up to about 55 to 60, possibly even to 65 to 70. So right now, today, the other thing I wanted to mention is that every time we get these supply side shocks on oil, including, and you don't have enough fingers on your hand to talk about this. You just don't. You name a country that sells oil, there's a problem, right? Or there's a war, or there's a pipeline that's been destroyed, or something. And every time we get these supply shocks, crude oil rallies up into a resistance level and then collapses every single time. And this has been the year of supply shocks, starting off with this big rally up into the Ukraine war in 2022. Fair enough, that one did drive the oil price up dramatically, all the way up above $100. But since then, and that was early 2022, so 3 years, 4 years, 4 years, we've just been moving down on crude oil. And every one of these little spikes here has been a supply side shock of some sort. And one of them was even a tariff shock. I thought people thought we were going to be tariffing oil from various countries. I think even Trump might have actually even said that. I know he said we were going to tariff copper and a couple of other things, maybe natural gas, can't remember. But it was crazy.
Honestly, at this point, it's probably the list is probably smaller of the things he said he isn't going to tariff.
Yeah, exactly. So oil got into the tariff mix as well at some point, I think around about this zone in the middle. Anyway, the point is that every time we've had these supply side shocks, the price of oil has absorbed it beautifully, like a champion. And I think it's going to continue to do so until this changes. So we're in a downtrend. It's a downward sloping channel, which will eventually break out to the top side. But when that will happen is what we're trying to pick now. What's the timing of this? I think we're going to go lower and then bounce out, but maybe we've got low enough already. We've broken above a short-term trend line. There are my positions. Last one taken at the 200 period moving average. We fell back down to the top of the trend line and bounced off the top. So that's kind of bullish, right? And if we can hold that and get back above the 200 period moving average, then maybe we're in for a bit of a rally. I know some commentators, like our favorites over on YouTube, won't mention names. Those in the private group, we talk about these people sometimes. bullshitters who've been calling for oil to rally up to about $70 or $80 over the next couple of months. Okay, fair enough. So is it going to be $80 or is it going to be $40 or $48 in the next 3 months? I actually don't know, but I'm going to go with the momentum or direction, the tried and trusted play, rinse and repeat, and that's to sell rallies. And until we see otherwise, that's going to be my strategy. So
Yeah,
the first warning sign,
it looks like a bit of a tall order for that, because when you get those breakouts just below resistance, it does kind of, it limits potential. I mean, just talking about TA here, obviously I don't know anything about the behind the scenes, but always be cautious with that. I mean, if you just imagine the breakout happening, you know, above that horizontal line, then it's a different play. But I think you're probably right about that, looking at the basics of the TA. Yeah,
and the 200-day moving average is flat on that horizontal too. So we've broken out of the trend line, but we're stuck underneath the 200 and the horizontal, and a big, strong rejection from there. Not quite. The bounce off the trend line has been a little bit flaccid in comparison to the rejection from that horizontal and the 200. So until proven otherwise, and this is the thing with trading, and Paul, you'll agree because I've heard you say it before, go with the setup, go with what the charts are telling you. Don't preempt it. Don't try and predict anything. Play what you see in front of you. Eat what's on your plate, as my mother used to tell me. And if you don't eat your pudding, if you don't eat your supper, as Pink Floyd says, you can't get your pudding.
That was nice.
If you don't eat your supper, yeah.
We do
that
have
was Pink Floyd, right?
Yeah, that's right. Yeah, I love Pink Floyd. A campfire, Pink Floyd, and a starry night. That's all you need. There's got a question in the other live chat from Akshay about NatGas. I'll just quote it. On Natty, wanted to understand the relation between price and CFTC position with respect to unexpected current moves. Does that make sense?
Yeah. So what he's talking about there is the commitment of traders, I think, at the COT report, commitment of traders report. And I think the question is, how do we relate the positioning of traders, including managed money, commercials, hedge funds, banks, retail traders, etc., hedge funds? How do we look at those numbers, the way they're positioned? Those numbers come out every 2 weeks or so, and we can see how the big players are positioned. And when those start to change, we can get an idea of, not totally, because we don't know why they're changing, but we can see that they are changing positions, and we can try and make some assessment from that. And generally, I think what you'll find now is that we were caught short, that traders were caught short. If you look at the COT report, which I haven't done today, I haven't seen the last COT report actually, but I think you'll find that there were too many people short and they all got liquidated. This is what happens when...
Follow-up comment. Managed money had placed a huge amount of short positions in the last 3 to 4 weeks. So is this massive up move a result of their short covering?
Yes. That's the answer. The answer is yes. Yeah. There you go. So that's how we use the COT report, Akshay, to try and find out where there is extreme positioning. And there are other systems or other sources that you can use. I'll give you one of them. I can't put it up on the screen right now, but I'll read it out to you, or perhaps type it up in the chat. And it's called Market Bulls. That's easy to remember. Market Bulls, B-U-L-L-S, Market Bulls. And on there, it's basically a summary of the COT report across all of the futures, different futures markets. And you can see basically it tries to pull out the extremes and show you who's extremely, which markets are extremely over positioned or over bullish or positioned too much to the long side, and which markets are opposite to that, positioned too much to the short side. So it's basically a summary of the COT report across all the markets. So useful tool, Market Bulls. I haven't looked at that today either, but the COT report's a little bit difficult to understand if you don't know what you're looking at. The Market Bulls report is a little bit easier, makes it easier to read. But yeah, I think this is probably a short squeeze. This is normal. Everyone gets very excited about natural gas going down just as much as when it goes up. It's not a market that everyone gets excited about the bull side all the time. It's a ranged market, it's a commodity. And so when it starts going down and people think it's short, they'll pile into the shorts. You don't see that in stock markets or in crypto as much. But in commodity markets, the shorts can be just as fierce as the longs. And in fact, we don't get this stair climbing, falling out the window scenario so much. We get violent swings in both directions. And so when we start dribbling down like this and people get overconfident on the short side with no sign of it turning around, no bullish fervor whatsoever. It looks a bit like Bitcoin, actually, to me, talking about that. I think Bitcoin is going to do this, Paul. This is what silver did, right? This is what Bitcoin should have done. This is what natural gas did. And a whole host of other things have done this. Gold has done this too. So, and it's a short squeeze. I'm not saying that, the others were a result of a short squeeze, but this probably was.
Yeah.
I hope that answers the question.
That's great. Yeah.
Yeah. All right. And so you can see this market's now moving up. Here's the futures chart, by the way. This is where I normally trade. You can see the gaps there. There's the rollover gap, a weekend gap that we haven't closed yet. There's another, that was a rollover gap. That was a weekend gap that's been closed. And then we've left a massive weekend gap down below, right at the bottom here. That's going to have to be filled. And that one at the top is going to have to be filled. And we're stuck in the middle between the two of them. Really a bad place to be taking a trade. And we've got a market structure break line just above us here at around $5, $5.05. So certainly not going to be looking to buy further. And I'm not shorting yet either. There's no signal to go short at all. These are all green candles, white in my case. And that's that. Now, shall we switch over to cryptos? And before I go into metals, what's the feeling? Or should we just finish off with gold and silver?
Your call. What do you want to do? All
right, let's finish off with gold and silver, and then perhaps we can, and I'll come back to stocks too. But so I'm hedged on both gold and silver. So I don't have any skin in the game apart from my hedge positions. We've been long on silver the entire time, right from, I think further back than this, $27, I think was our lowest trade, 27. And then you can see I've added long positions all the way up on the dips as we've gone up until we got to here. And then I went short. The genius, James, went short just about when it was about to break out, and it broke out. So I hedged it. We only have a very tiny position here and a very tiny gap between the short and the long. So I've got a short on and I've got a long on, and there's just a couple of dollars between, not a couple of cents, a couple of 10 cents between them. So this just kind of looks bullish. And the next thing that we need to look at is where could we go on silver? There's no evidence of this turning around. It's incredibly overbought. It's gone parabolic. It's gone exponential. There's no knowing where the top is. Could be anywhere. All right. So don't try and pick tops in an exponential market. Next target is $102. That's the next fib level. We've got to the 3.618. Next one is a 4.236. And I dare say there's some more that I could add on there if I sort of extend this a little bit further, although it might be the end of it. I think there are further ones I could put higher up. But let's see what happens when we get to 102, 103, maybe 104, just above the big round 100 level, just high enough to get everyone more excited about buying above 100, and then maybe we'll reverse. I think that's got a pretty good chance. 102, 104, 105, maybe 108 even, and then a dramatic collapse. But I'm going to be waiting for that dramatic collapse, not preempting it. It's very important to remember that. Now on gold, I'm hedged, no trade, with a very tiny hedged position. On gold, this is a bit more serious. I've got a couple of positions down here and one from over there, a long way below where we are. But I hedged the entire lot the moment we broke out through the first fib retracement level. Remember, I've been long on gold all the way since the breakout from this triangle. I haven't been trying to sell it until fairly recently. Once we broke out through that last swing high and the channel top, at the channel top, I started to try to look to sell at the channel center line, thinking would be a bit of a stretch to get further up to the top of the top after having gone so far. We were long from this triangle. We got long all the way up to there, took some profit, got long again, and now we're starting to try and get short. So I'm not trying to pick tops. I'm not trying to be a contrarian. I've been going with the trend on both gold and silver. I've been more readily shorting silver or hedging silver than gold than silver. But, it hasn't been quite as strong as silver. Silver has 2x'd gold in terms of its gains. And so that's where we are. Next stop for gold, and people are asking in the private group, where should we sell gold? And my answer is nowhere until we see, first of all, evidence of reversal. But first, before that happens, we've got to get to a decent resistance level. We've got a channel top that we could get to over here, right up there. We've got the next fib, the 2.618 and the 3.618 fibs above us. This one's at 4,920 and the 3.618 is at 5,290. I think those are both viable targets. And I think we could actually get there fairly quickly. And so I'm definitely not going to be selling. And I've got a long position on already because I'm fully hedged. And that means, although I've got shorts on, and this is the beauty of hedging, in my opinion, not everyone enjoys hedging, but the beauty of this is, although I've got shorts on, I've also got a long position equivalent to the size of all of those shorts put together, which means I've got one position that's moving into a very large profit. And by the time we get up into these higher levels, if we do, I'll be able to take some profit on that long trade, use that profit to mitigate some of the risk on these short trades, and even consider adding another short. By that time, these shorts will be way out of the money, but that risk has been mitigated, covered, paid for by the hedge that I've already got on at this orange arrow. It's a bit of an arse about face way about going it. I understand that. And not everyone understands hedging, but there is, and I was thinking about this. I really like to mention this in earnest, Paul, and viewers. I was thinking about this last night, just before I went to sleep. The biggest problem that traders have is not understanding the charts, not understanding how to draw a trend line or a moving average or anything to do, not how to switch on a computer. All of these things a 5 or a 10-year-old could do. A 5 or a 10-year-old could draw something like I've drawn here. That's not the problem. The main problem is when traders have to get out of a losing position, adjust a losing position, do something with a losing position. And most traders only think of one option, and that is two options really. The go-to option is to add to the losing position, double down, go martingale on us, and try and trade your way out of it by doubling up, buying. Let's say you're going long, buying more as it goes lower. You buy more, average down, reduce your average price, etc., until your account gets blown out because it just never turns around. The most difficult thing for traders is getting out of a losing trade or dealing with a losing trade in general. I know this for a fact because it's my main problem too. It's one of the reasons why I'm talking about this, and the reason that I use hedging as a technique to manage risk rather than using stop losses. You might say, well, you've got a bit of a weak mind then, James, if you can't handle stopping a trade out and taking a loss. Fair enough. I take your point. When you're trading very large account sizes, and as your account size grows, and when a 1% loss is, let's say, $10,000 or $20,000, it becomes a bit more difficult to take that loss. Even though your account's bigger and the percentage is the same, it's more difficult because it's $10,000 or $20,000. It's a lot of money, even though the percentage is the same. So the point is, and I'm drawing to a close, the point is that hedging is a way to get out of a losing trade, to manage your risk, manage the downside without having to put yourself through the psychological ringer that you can't deal with, that you can't handle. Most people cannot handle clicking a button to delete $1,000 or $500 or $10,000 from their capital by clicking a button. It's very difficult to do that. Very, very difficult. But when you hedge a trade, in other words, these trades that I'm talking about now on gold, these are all short trades which are still open. I've not had to take that loss. I've got a floating loss, which I've locked in with a hedge position, but I've got the psychological advantage of seeing this trade, the orange arrow, the hedge trade, the long trade, moving into profit, even though these ones are moving deeper into loss. And so it's a psychological trick, I give you that, but there's also another good reason for it. And I've highlighted all of the stuff in a video, which I put out, and I'm not going to talk about it further because we're going to run out of time. But below this video, this live stream, there's a link that says, I think it says, and if it's not there, we'll put it up there shortly, called the Risk Lock Method. And you can download it. It's a video and some ebooks and so on. You can download it for free. Go and read it, check it out, and see what you think about hedging. I promise you, it's for many traders, and those in the private group will agree with me. I think some of them, not all, but many will agree that hedging has been the salvation for their trading in the time that they've been in the private group. Learning how to hedge, simple as that.
Totally. I mean, the thing is, it's like you're dead on, and I still, struggle with it. But I mean, there's many different ways to approach managing that ourselves, and for me, it's all in the planning. It's all in the planning. So there's nothing wrong, as an example, with putting in you talked about people who are adding to their position as it goes the wrong direction, right? There's nothing wrong principally with those kind of, trying to scoop up V-shaped bottoms with a scaling in strategy. But the point is, it needs to be planned before the fact and not a reaction to, or a panic reaction to whatever's going on, because you're not going to properly have assessed it, because you need to be looking at a trading, okay, if it goes wrong, then this is what I can do. And then you're enacting your plan, as opposed to, oh, it's going wrong, I haven't really thought about risk management, add to my position. It's like that. You want to avoid that. And whatever it is hedging, or in crypto, giving your stop loss. I mean, the first lesson I learned in crypto, volatile asset class, is your stop loss has to be, it's a player in the game. It's not just a risk reward 10% decline parameter. It's not like that. It's not the Gordon Gekko of approaches to stop losses. What it is you be much more adaptive to that, and you have to use the volatility to your advantage. And when I started doing that and giving the trade room to breathe and come down and go up and avoid all of the bear traps and the bull traps which we see, then things got a little bit easier. And the trick is, of course, knowing when to just let it play out and knowing when to take action. But you should always have in your planning a red line already mapped out, that if the price action goes below this, whether it's an invalidation or a certain percentage decline, whatever, that you take action. And it is the people who refuse to take action where the problem lies. And then you end up with like, oh, well, I had 10,000 position, but now it's $500. Like, and so it's whatever people do, whether it's, and I think hedging is fantastic, but whatever you do, just have a plan and stick to it, and plan for all eventualities. And just doing that will stop the craziness. And then it's just a case of, it says on my post-it note to hit sell, therefore it's just a little bit easier, as opposed to it might go up. Now that's the whole game. So yeah, it was a very important point.
Yeah, absolutely. Thanks for that. Just coming back to the NASDAQ, you can see we're bouncing out. The market's open now. Half an hour ago they opened. Massive move up here on the NASDAQ on the 1 hour. Just completed that 1 hour candle. We've just 5 minutes into the next hour. If you're trading the NASDAQ, watch for the gap above us. That was the weekend gap that we experienced the other day. Everything dropped, including crypto. It was just one of those taco Trump things again, regarding tariffs on Greenland, or Greenland supportive countries. I think most of Europe, in fact, the whole of Europe. So there's the gap. There's the Greenland gap right in the middle. Let's put a big arrow there. And that has now got to be filled today if we're going to make any progress higher. So let's put the Greenland gap right there. So when that gap's filled, and notice at the top of the gap's also the 200-hour moving average here. We've gone to the hour chart here. And there's that trend line that I was talking about. Let's go back to the 4 hour. And if you're trading this, there's the 4 hour. Remember, we're aiming back to the trend line that we broke down from. It's now a bearish retest, even though my overall view of the market remains bullish. It's a bearish retest of the trend line, and that's where the action will be. But first, we've got to get through the gap. So watch this very closely. I think we're going to give it a go today and have a go at that. And as these move up, let's go back to the day chart. You can see S&P is moving up nicely as well, quite vigorously, actually. And some of these names are moving up. I'll come back to the names in a minute. Bitcoin moving up. And actually, I'd like to quickly look at this Bitcoin chart, Paul, because I'll come back to stocks at the end. But I want to, if you're ready to launch into Bitcoin when I'm done here, are you ready to go on that? Or I can carry on with stocks, Paul?
Whenever you're ready.
Okay. All right. Super. All right. No worries. So basically, we got this channel, which by some weird miracle, we managed to bounce out of the bottom of the channel. It's a very interesting level as well. It's also a sort of a tweezer bottom. It's a horizontal line. It's a channel. But what interested me at looking at these charts today was this little note I made here. The highest bull volume candle, that's this arrow, this volume candle here, since early 2025 in the 25 rally. That was early 2025. And there are the bull candles that we had. Last time we had green candles of that size was all that time ago. And interestingly, we have quite a similar chart structure too. And it's not exactly the same, but it's not all that different. And if I clone that and stick it on there, you can see we're not all that dissimilar. Different part of the chart. This one's moving up into that zone. This one's moving down. But these blobs look similar. And of course, that blob sloped down into the end of the blob. This one's sloping up. Just an interesting observation. Very, very large daily candles here, the last 2 days. And even more interesting was that the largest of these two candles, of these two big green candles, was the smallest price candle. So the big price candle here had a smaller volume candle compared to the very small bullish price candle with a much larger volume candle. So that means there was a lot of effort being put in at that candle right there, and it failed. So that's not good.
Yeah, the clashes of swords in the battle.
Yeah, yes. A lot of work happened. We don't know what was going on right there at that 4-hour candle, but there was a lot of volume, massive volume. Right, so we're back down to the bottom now. Let's get rid of that green blob. I don't know what you think of this, Paul, but I think if we can form a piercing pattern, close more than halfway up through this candle, yesterday's candle, that would put us above the 50 period. It would be a piercing pattern reversal pattern, and it would also put us above 90,000, which I think is the bare minimum that we need to hold in order for this pattern, by some miracle, to bounce out, just like it did last year. Bounced out of what?
You were saying in group yesterday about that waterfall pattern. You feeling that Bitcoin could shake it off?
I don't know. This is a very bearish pattern too. Yeah, sure. Yeah. Thanks for reminding me. Incredibly bearish pattern. Whenever you see it, a waterfall pattern starts with a very powerful thrust up, and then starts trickling down and gathers momentum, and eventually defeats the lower part of the start of the impulse candle. So that's exactly what we did. Big impulse, 2 candles, massive volume. We started trickling down and picked up pace, and then got down below both the impulse candles. So that is pretty bearish. And actually, at the bare minimum, we need to get back to the base of that impulse candle and above it, and close above it, before we could even think of being slightly bullish. And that's 91.5. So not even 90 will cut it, I don't think. So 91.5 for the minimum before I'd feel maybe there's a chance of this, this pattern holding here.
Well, look,
and that's all I've got to say.
Yeah,
and I'm 50% hedged.
Yeah. I mean, let's swap over. Like, I think the issue is that what we need to understand is that we've had higher time frame signals, selling signals for Bitcoin last quarter, right? Losing certain key moving averages to 50, weekly 50 MA, all that kind of stuff. So when we get to a point where, okay, so, because the whole narrative with Bitcoin is, right, until we get up to 101K, return back to the 50 weekly moving average, we have to presume more downside because it's that bearish retest. So up until this point, all the price action up until this point, right? If we haven't even got there yet, right? The sellers will be looking for an opportunity to take back control, right? That's going to be the narrative going forward. So we have January, we break out of the key ranges, and okay, good. January bump. We're being very mindful of the January bump. What's the next move? And this is what I was telling to people in the group. It is the second move in January, which is going to set the tone. And sadly, for whatever reason, this is the second move. And obviously, we can speculate about Bitcoin may have ascended higher by now if we didn't have the trade wars. I think that's probably quite safe to say, because obviously all the markets have been affected. But this is the problem at the moment, right? We're trying to shake off a bullish narrative, and Bitcoin has to do something pretty impressive to do that. And therefore, every fear event is going to be where the sellers take back control, and then the bulls have to fight for that narrative. And then when if the world is on fire, it's very difficult for the bulls to say with any credibility, well, no, Bitcoin's this, you should go in Bitcoin. It's like no one's listening because the world's on fire, right? So that's the general idea. I mean, this is the bearish scenario, right? And obviously, if you want to check out Bitcoin update from yesterday, there's a bullish scenario. There's a really bullish scenario we talk about, right? But this is you can see the 50 here in red, which has been supporting the price action. That's around 101K. That's what we've got to get back above higher time frame stuff. But this is the daily 200 EMA crossing the weekly 50 SMA, and we had that golden cross at the start of the bull run, and now we've had the death cross, right? And now we're in a bear flag, and we're at the bottom of the bear flag. And you can see here, this is December. This is where the price action had been suppressed by this 3-day 200 MA, which is very important, very relevant. We had just flipped it. We just started to make a move up. We ran into resistance. That's fine. But then we were looking to come back down around to this area and then move up. But then we got the tariff news, and now we're stuck again back where we were in December. And this is the 4-hour chart. This is an ascending triangle, which we're now out of, and all these key moving averages are above, which is a complete reset. And of course, this could still be a bear trap, right? So let's have a look at what Bitcoin needs to do. So this is the 15-minute chart. Okay. Now, just to highlight how I've been playing this, just before I move on to that, let me just find the right charts. Okay, so I was accumulating around here, right? Once we got the flip, came back in our ideal retracement zone, everything was perfect, everything was happy, great stuff, right? And we moved up here with my intention to take profits at 101, right? That was it, because we said that's a big line in the sand. Everything's fine, but then when we see this bear flag appear in our new ideal retracement zone, you can see it coming back down, flip this level. Once I got a break
and there was literally just the Greenland collapse right there, that red move down.
Yeah, and then once I saw that, because when you see a bear flag forming where you expect to bounce, it's a warning sign, right? So once I got that candle body close, I reduced exposure significantly, right? And that's how we need to play it. We can't take any risks at the moment. So, but when will I re-add to my position? Well, I'll re-add once we've got back above, potentially, once we've done the same thing we did in January, which is get back above these moving averages and get back on the flip side of 80, 90K, like you said, James. And this is the 15-minute chart. And we have a double bottom just being confirmed right now, just below resistance. But here's the thing. No one's going to enter a trade now, even though we've had this double bottom kind of confirmed, because the reality is this whole area is the neckline, essentially, right, for a confirmation of a reversal. Therefore, what you want to be looking for now is you want to see a clear break back above these moving averages, which simply terms is flipping 90K right now. We just need to flip 90K back, right? So we need to get off here and come back down. So it's looking like we might be able to do that on the back of this double bottom, bearing in mind—
Just done it now. Seconds ago.
Yeah, it's confirmed the double bottom, but because we're just below resistance, we need to see a stronger move first, and then we want to come in on the flip side. That would be the play. And again, you have to ask yourself, what is the sort of bullish move I'm prepared to come in on with the current situation? Well, you can say, this is a swing high I want to see surpassed. So if we see a breakout—
Hey, Paul. Sorry. That breakout and the flip side move you were just talking about, when you break out, come back down, you drew the red line in. So I think this is where FOMO becomes a problem, right? So you get the breakout and people pile in, and it comes back to test the breakout level, which is the right place to get in. Yeah. But how do we know it's going to come back to retest that line and that we won't be left behind?
Well, you don't, right? But you have to. But in these situations, you have to. All we're trying to mitigate is we want to enter with minimal downside risk, right? We want to enter on bullish confirmation, right? Now, we have to first acknowledge that this pattern is ambiguous because of its positioning just below resistance. So that highlights we need to see a stronger move first before we consider entering, right? You could then draw a line in the sand and say, okay, I need it to surpass 93.5K, this previous swing high, which then gives us trend-based confirmation. And then you look to come in on the flip side. You could say that. So that would be a move like this. And then because we've had a significant move, that's when the bulls will start to come back in on the flip side, as opposed to something like this, which could just do that, right? So, and there's no guarantee of that, but typically if you see a move like this, the probabilities of buyers showing up on the flip side because of such a meager move is reduced. Whereas if you see a move higher, the probability of people coming in on the flip side increases. But then if you get trend-based confirmation of it as well as a reversal pattern, meaning we surpass previous swing highs to put in a higher high, that's when the probabilities start to stack up that buyers are going to enter on the flip side. So it's always about, this is what I need to see to come in to mitigate a bull trap or any further downside move, and then you start to accumulate, right? There's other alternatives as well. You could, for example, might see a meager break. We surpass this swing high, and then the price action just manages to stabilize for a few days. Then you can start to look to accumulate on the basis of that because it's formed the base. But the traders which will see this move and start piling in now are at tremendous risk of it rolling over, right? And that's what we're trying to mitigate ultimately. We want everybody else to look at it as a no-braining move, and then that's what we do. And you see, this is the break, right? Everyone so people in our group would think, okay, this is good. We've finally broken above. I'm going to look to enter at, these areas. And I'm like, no, wait for this area. And again, it goes back to what you're talking about hedging. No guarantee it's going to come back down, but this is nonetheless where I want to be to mitigate risk, right? In a larger bearish scenario. And that's the way you need to play it right now, unfortunately, because it is just a little bit all over the place, and this is just a 15-minute chart. I mean, anything to add or to that, James?
No, that's excellent. I think that's really good. I think like I think FOMO is ultimately the problem that FOMO shows its ugly head in many places in trading, and this is one of them. It's the fear of being left behind, not the fear of not getting into the trade at the bottom or whatever, but it's when the breakouts occurred already, and you think it's just not going to come back. It's just not going to come back, and you get locked out, and the market goes off without you. And I think the probability of that happening is much lower than the probability of a retest where you can get into a proper structural trade and buy the dip on the pullback. I think the chances of that happening are much higher, obviously.
Yeah, I think it's like the interesting thing is that, like, I would ask people, like, what are you worried about? Like, you're worried about missing a trade? You don't lose anything by missing a trade, right? But you do lose something by being a little bit gung-ho. And therefore, these ideal retracement zones I keep posting and probably annoying everybody in group, right? It's not a guarantee or a prediction. It's like, this is what I need to see. If Bitcoin then shoots up to a different level, we reevaluate and we just find what's the most probable, manageable entrance for ourselves. And if you don't get the trade, then there's no entry, but you haven't lost any money. You live to fight another day, and then you just reevaluate. And that's the way that's FOMO as well. And that's what people need to recognize. Like, you don't need to be in a trade today if the conditions aren't right, right? You want to join with everybody, right? You don't want to be, what's it like? Are you the guy who turns up and just sits in the party before it started in the corner by yourself? Or do you want to come in with everybody else, right? Or wait, be the last one to come in once everyone's made a decision about the direction, look really cool, right? That's the whole thing. But I mean,
no, but just don't be the last one to leave.
You can't.
That's the other problem, right?
No, you can't be the last one to leave. But let me just touch base with Ethereum and Sol as requested. So Ethereum's a good barometer for the rest of the market, and the reality at the moment is that we haven't seen too much selling activity in the altcoins, at least rather nothing out of proportion, right? So everything's okay. This is Ethereum though, and this was a bullish setup to try and break out of this clearly definable ascending triangle line and this symmetrical triangle. So the best play for Ethereum remains just the waiting game. You want to see a break around above 3,342, something like that, and then again, there's that red line again. Look to surpass that swing high, come back in on this. Now, you'll notice there's a red line here. Of course, there is a strong support level below at around 2,700 right now. So you could accumulate at that level. But the reality is, if you look at the Bitcoin chart I just showed you, you look at everything which is going on, there's a time and a place for support buys, and there's a time and a place for waiting for bullish confirmation. So I would say in this case with Ethereum, we do want to wait for bullish confirmation. And this isn't probably the best area to come in on because there's too much downside risk. And we can obviously reevaluate again, as I said, if that heads lower. But Ethereum's okay right now. We just need to wait and see because I think the Bitcoin and crypto like to do a lot of traps and stuff at the moment. But Sol was a cup and handle we were looking at, and we pretty much were looking to accumulate at this area at around 133. Now, this is where my planning came in. I was telling people in the group, so the Sol has reached has given us an indication that we're going to form the handle. Great. So that means we either wait for a breakout or, because I'm quite happy with lower prices with Sol, we're going to be looking to buy around here, maybe at the base of the handle. But you'll notice that I think anyone in group will, I told everyone that, look, I'm not going to accumulate here. I want to see a bounce off this level and a move back up to this trend line before I consider an entrance. And because we haven't got that now, we've now rolled over, and therefore I haven't entered a trade because my trade criteria required additional bullish confirmation before I'd enter, meaning it solidifies this level before I look to come in, and I'm not trying to catch a knife. And because of that, I haven't entered this position, and it's now rolled over, meaning I'm safe, right? And that's the whole key. A lot of our setups, which we post sometimes when we have these market downturns, they do invalidate, but half the time you shouldn't have entered them anyway because they never confirm the double bottom, or they never confirm the breakout. And this is why having a strict criteria for your trades can help, because some people will have seen this Sol setup and said, okay, well, it's Paul said 103.3 and there you go. But they would be now stuck down here. Whereas if they had followed the instruction, which is wait for bullish confirmation, wait for a little bounce and come back to form in with the buyers, then the probabilities are more in your favor. So Sol looks like it's having a bit of a reset. We do need to wait and see. We obviously have lower support below at 121, which honestly wouldn't be a bad buy. You can see it's a range play right now, but this has been invalidated. But this could very easily recover. But for now, it's going to be a support buy or coming up here. But nothing too scary has been happening. Nothing too scary has been happening with the altcoins at the moment. As an example, XRP is exactly where we want it to be for a bullish trade, right? It's right at the POC. So we're okay, but we can't enter these positions now until Bitcoin gives us a confirmation signal. And then once we get that breakout of that double bottom and we get a move up to this range, then we start looking to enter positions on the retest. And that's how we need to play it. Frustrating, we might have to wait a week. Yes, but it saves us from the potential downside if the bearish narrative continues. And that's the game. At least this is the way I see it.
Yeah. Awesome. The Bitcoin dominance chart. There's my charts. Let me just show you this quickly. Bitcoin dominance chart spiked up. I'm sure you will have noticed this in line
it's got a double
with
top at the moment. Yeah.
Yeah. So last time it did this was over here, right? There was the liquidation in October, 10th of October. And what happened after that? Bitcoin actually found its feet eventually and got going a little bit all through this period. And now this has happened again. Not nearly as dramatic, but a little spike up through the 200 period there, like we had there, much bigger one in that case. Maybe, and I think Bitcoin, that little spike there as well, also sparked a bit of Bitcoin buying. And we've got another little spike here. So I'm not an accomplished Bitcoin dominance analyst, Paul, but you are. I don't know if you see any significance into these spikes, but I think it just seems to align with times when the Bitcoin altcoin ratio gets a sudden shock and Bitcoin then gets a bit of a wiggle on afterwards.
Yeah, I mean, when you get these big crashes, you get a lot of liquidations and you get a lot of money changing hands, and that really affects things, right? And then it can reset. And the paradoxical thing, I mean, if I just switch back to, sorry, I've got a Bitcoin dominance. Let me just put one back just for a second. The paradoxical nature of how Bitcoin dominance works in terms of informing your trading decisions. So if we ignore the bearish narrative, just put blinkers on just for a little bit. Where do we want Bitcoin for a long trade? We want it to be at support. Now, it's gone through support now, and it's a little bit irksome where it's going to land. Therefore, it's not where we want it to be. But if it does confirm that double bottom Bitcoin, it does give us what we need to come in on the flip side, then Bitcoin's at support. Then where do we need Bitcoin dominance to be for the probabilities of an altcoin long playing out? We need it to be, like it sees on this chart, at resistance, which is where it is right now. This is where you enter an altcoin long. this is where you don't. It's the inverse, essentially. So if Bitcoin can put in that confirmation that we've recovered the levels we've lost, and Bitcoin dominance remains elevated, then you put those two things together and you have a good opportunity for a long trade. And then you look at total 3, which is now putting in a potential double bottom at this support line. The stars are aligning potentially for the next move up. But again, we have to wait, because right now Bitcoin is king, as always, and we need to get it at support. And this isn't what I would call at support, because we've got so much resistance overhead. But on the flip side, and then we've got all of our nice money flow all lining up, and that's when you take a trade, and it's more probable that way. And that's how I use it, at least. But sometimes I'm going to be honest with you, and I think the last few months I haven't relied on Bitcoin dominance as much, because the signals have been very challenging to read. Because it's not, you could say that it goes down, it's good for altcoins. It goes up, it's bad for altcoins. But the reality is as well, you can have Bitcoin being really bullish and just slightly outpacing altcoins, even though they're moving as well, and Bitcoin dominance can still go up. So it's all very contextual, and you have to just learn to kind of interpret what's happening in the market and look at it through that lens. But it can give people an edge in crypto, because it's always, in volatile asset classes, as you know, it's always about getting probabilities in your favor, right? It's not about going to Vegas. It's about getting probabilities in your favor. And this is all this is. This is Bitcoin dominance. These indexes can give us that as well, which is why people look for these. We were talking about this earlier, which is why people look for these pairings and these influences. Like, does MSTR lead Bitcoin? Does Bitcoin lead MSTR? Because that's people feel if they can crack that code, they've got the edge. But Bitcoin dominance is definitely an edge for people. So I'd encourage people to chart it, as well. But yeah, cool.
All right, fantastic. Let's finish off with
Netflix
this question
before we go.
All right.
About Netflix.
All right. Yeah.
Any thoughts on that?
Oh,
bad earnings?
No, I don't have any thoughts. I don't. I can have a quick look. Let's have a look. I have not looked at. It's not one that I trade regularly, but let's have a quick squiz.
Do they still send DVDs?
Finish off with it.
I don't think they do that anymore.
I'm going to. Let's just put it on this SMH and Netflix FNF. What is the ticker?
NFLX. Well, I presume that's what it is. Yeah, I'm going to presume that's what they're talking about. I do read the news.
So Netflix had a really good run up in the last couple of years. Been fantastic. This is when they introduced their paid advert sort of hybrid system, where I think you can pay less per month, but you have to watch adverts, or it's free. I can't remember. I just pay for the whole thing. Well, I don't. My family does, so I don't really watch it. But that was a result of making it cheaper, basically. But suffering through the adverts was the thing. And now we've broken down through all the moving averages, got down to the lower 200-period Bollinger Band. And if we look at this in the broader context, let's try go to a week chart. It's just been a very steady uptrend generally overall. And maybe it's a bit overextended. We've got the 200-week down here at about $62. We're at the 100-week now at about $90. Let's go back to the day chart. I'm not sure if it's a name that's going to hold ground. I don't know anything about this industry, to be honest. But it seems like they found the right formula. And unless anything major has changed, I think this is a pretty constructive chart. But we must allow for pullbacks. We're at a pretty good zone right now. If I draw a horizontal line across there, and you might be asking, I suppose you're asking because you're interested in buying Netflix here. This is a good zone. Let's just draw that line there. It's a double bottom, and we're at the lower 200-period Bollinger Band on this day chart. And maybe we should make this into a log scale. It is a log scale already. Let's put this on a regular scale. And okay, that looks like it's much more a more vigorous pullback than it looks like on the log scale. And let's see if we reached any Fibonacci retracement levels in that process. And we've actually got down to below the 38%, down to the lower Bollinger Band and the horizontal line, which I drew. And the next retracement level, which I think I would probably go for, would be the 50% retracement. It's not a fib number, it's a halfway retracement. Most markets will go back halfway, especially after a prolonged move like that. That could take us down to $75 on Netflix, and will also be pretty close to this previous swing high. So let's put another line across there at that level. And then we've now got a zone within which we can that we can aim towards. And I'll just quickly show you that zone. I don't want to overextend our stay here, but where is the zone? Down there. So yeah, there's the 50% retracement, and there's that previous swing low. So I would wait for Netflix to get into that zone, which means it's going to get very oversold through the lower 200 period Bollinger Band, and it would be a great opportunity probably to buy at those stressed levels. So something like that for Netflix.
And we have to understand also the context, right? So there are huge in the median landscape. You've got a Hollywood which is seriously suffering. LA is seriously suffering. You've got a lot of stuff moving to Canada and so forth for tax breaks. We have these massive takeovers and mergers. Putting the politics of that to one side, which is quite scary, if I'm honest. There's a lot of reshifting. A lot of things are being cancelled. A lot of things have been moved around. And where the streaming platforms, we're talking about Paramount Plus, Netflix, Apple TV, or Apple, whatever it's called now, I don't know. They're all still trying to find their feet after a period of immense amount of money being thrown into them, too much content being created, then realizing they've leveraged themselves a little bit and having to pull back. So it is a landscape which is struggling. Now, I don't use any of these things because I'm a torrent guy, right? I don't do anything like that, right? And I've always been that way. Sorry, people, but it's my way of taking money from the fat cats. But it's
sticking it to the man.
Sticking it to the man, I'm fine with it. Come and get me, But the reality is that it's a changing landscape quite seriously. And on one hand, you've got network TV, which is dying. On the other hand, you've got streaming platforms, part of everyone's everyday life. But people are frustrated with the fact that they have to have a login for 101 different shows just to watch what they like. So if you want to watch Silo, you got to have Apple TV, right? You want to watch Taylor Sheridan, you need Paramount Plus, right? It's like this, and this is frustrating for people. And is Netflix going to be the one on top? I don't know. I'm not sure. So, and that's the bigger picture. We just need to bear in mind everything's in flux. So coming back down to the support line,
and don't forget YouTube and Rumble as well in this whole sphere. And I know absolutely nothing about it. So. But I think given what Paul's just said and what I think as well, is that if you're going to be trading this, be conservative rather than aggressive, because, and the other thing is subscription services, no matter what you're subscribed to, are normally the first things that people ditch when times are tough. So if we do run into economic problems, not that we are right now, I don't think, keep that in mind. But I think given that, the plethora of media content that's out there, quite a strong pullback, double bottom, it's probably got a bit too much momentum. I think we'd probably look to get down to that level down closer to $70 or $60 before buying Netflix. You might want to have a little go here though. I mean, it's a decent place, double bottom, lower 200 period Bollinger Band, but we are below the 38%, and we're in no man's land between the 38 and the 50, which I don't like. I like everything to line up with at least some fib level on some time frame. I do believe in fibs as a very mysterious set of numbers.
You can't fight math. You can't fight it.
Yeah, you can't. Yeah. Anyway, that's it. I've got nothing else to add. Paul, have you got anything else? I think we must finish now. We've been going for 1 hour and 6 minutes.
Yeah, Steve said, great vid chaps. Rarely get to watch you live, so appreciate your take on it all. Thanks, Steve. Thanks for joining us and everybody else. James, you have got a tech video out tomorrow, which is going to keep people satisfied. And then I'll be doing a more crypto-focused live stream tomorrow, and we'll see where things are then. Maybe we'll have that confirmed double bottom, and we'll move above, and we'll get the nice retrace, and we'll be a bit in a position tomorrow. And I think, that's about it, really. And again, if you want to check out Bitcoin update from yesterday to see if Bitcoin is going to chase silver all the way up 200%, then check it out. It's an interesting video. Like, comment, and all of that. But good stuff. Thanks for having me today, James. Appreciate it.
It's my pleasure. Thank you, everyone, for being here. And as we leave, you can see NASDAQ's approaching the 50-day, and just a little bit to go to get to the underside of the trend line and the 20-day, and that's where the decision will be made. Are we going to go higher? I think we are. My target, as you can see on the NASDAQ, just to finish off the session, is all the way up there, closer to 29,000. Long way up. And the top 200 period Bollinger Band just trickling along above us, waiting and calling out, come to me, come to me. and that's the way it's going. I think it's going up there. So
you can hear it. So. I can hear it. I can hear it.
You can hear it. Yeah. Okay, everyone. Well, thanks so much. Thanks for everyone for watching, and I'll see you in my video tomorrow, Paul's live stream, and then Sunday Night Live, and so on and so on. And we're also moving into Circle, our new bespoke software. We'll be bespoke soon. A new app that we're using for our private group. So if you want to get in on our new app and technology, come and join us in the private group. Links below the video. If you don't want to do that, just please subscribe to the video. But you probably are subscribed, being a member already. I hope you are. If you're not, subscribe now, and we'll see you in the next videos.